Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the market. That is the crypto market, the stock market, and obviously the geopolitical situations that are embroiling all of the markets. We'll be talking about all of those things. It's important discussions to have today. As usual, we'll be talking specifically today, the oil is going higher. There's no sign of end to the Middle East conflict. Bitcoin's actually touched down as well. So we'll touch on those major asset classes and how it's responding to the latest developments in the Middle East. We'll talk ICE announcing investment into OKX at $25 billion. The token has moved almost 20% higher as well, but nowhere near $25 billion. So again, we will be talking crypto equity and token valuations. And we'll talk Anthropic CEO apologizing to president in the article, where things stand with the Department of War, this ongoing discussion between the leading AI companies and how they should be interacting with governments as it relates to military defense moving forward. So interesting stuff today. We'll also talk market thoughts and general price action reactions as well. So stay tuned for that. I've got Legendary in the co-host seat with me today. We're ready to get into it. But just a reminder, friends, before we do that and close out the week, this show is not financial advice. The market is incredibly risky. We do not know anything for sure, so please proceed with caution at all times and exercise your own judgment at all times. With that out of the way, Legendary, it's Friday. It's the 6th of March. How are you doing? How are you feeling?
GM, doing quite well. Looking forward to the weekend, to be honest, because yesterday we had GPT 5.4 come out, new frontier model from OpenAI. They dropped the split in the between having a regular model and having Codex as their coding model. It is now one unified model. So they changed the architecture there a bit. And looking at the model, I can't hide the impression that it is really catered to work excellently on OpenClaw. The way that it is designed to have a 1 million context window, to be able to process longer sessions when it comes to its own compaction, like handing over summaries between its own context limits, not being chat and coding model, not being separate anymore. So all of these things really make it look like Peter already had a solid impact on how they wanted to roll out GPT 5.4. It's not officially supported yet by OpenClaw, but obviously you can get it to run if you put your mind to it. And this is what I did. And so far, I've been really liking it a lot. And it is surprising because I did not expect to see 5.4 coming out so quickly. And I certainly did not expect that it is so catered to the agentic use. So that's really cool to see.
That is pretty cool. I do think that it makes complete sense, right? That people want to start to make it easier for you to run something like OpenClaw and kind of integrate into that system so that you can have your agents doing things. Am I right in thinking, Ledge, that Google did something in the last 24 hours to open up their own docs, open up their own suite of products to agents as well?
Yes and no. So what they did is they released a CLI tool, a command language interface tool, which allows for agents to use the calendar, the email, other Google integrations in an easier way. However, Peter has built what he called the GOG CLI before, and that was basically the same thing. And now it's an official tool suite with 40 skills and whatnot that is being published by Google, but you could have used all of these services in an agentic way before, and it was designed like that, but you didn't have the CLI, which makes the agent's life way easier because it removes context bloat and it's just more natural to use. And Peter has also making the strong point that we should move away from MCP service because, as the name says, model context protocol, they fill up the model's context a fair amount, and it's way leaner to run stuff on CLIs if you want to give your agent as many powers as you can.
Fair enough. The agent conversation continues. I guess we are hurtling towards that future where we'll all have our agents doing multiple things for us. To be honest, even at the most basic level, that's the thing I'm looking forward to most. Yes, I'm using Claude all the time to mock up different versions of our future, whether that's a website or some products or some things that we're playing around with, and I'm integrating it into the content cycle in certain ways. But I think at a minimum, you just want to be. It was always the dream of the phone, right? Can I just talk to the phone and tell it to call someone? Can I talk to the phone and tell it to put something in my calendar properly? And can it just work 100% all the time in a really informal input with your voice or text, and then just turn it into something that is accurate all the time? I think we're getting closer to that at the most basic level. And then, of course, you guys are doing more complicated stuff too. One thing I would say on my side that I'm finding an observation on the market, we're going to talk about all kinds of things to do with the market. We're going to talk, we're going to get into those interesting headlines across AI and crypto and the markets. But I would just note for a second that, and I'm going to bring this up again later, this is a really tough market. And I think every now and again you need to, I don't say this all the time, because sometimes I think you do need to look at yourself and ask yourself the question, what's going on? And if you're not making money in certain times of the market, you should be looking at yourself and saying, well, why am I not when everyone else is? I don't think this is the time where everyone else is making tons of money. I really think if you are managing your portfolio sensibly and well, you are preserving capital more than you are making capital in this specific moment. And I'm not saying, look, you could have caught the 2x on the South Korean index. You could have caught the 4x in certain memory stocks. You could, like, yes, there are certain ways you could have outperformed if you really timed it. But so many of these charts are vertical that it really feels like the opportunity was only, the window of opportunity was actually very small. And to me, that's not really investing as much as hitting the lottery at certain times, when I think ideally you want to try to be positioning yourselves for 3 to 6 to 9 to 12 months, something which you see as a trend that is going to continue to accelerate over that period of time. And I feel like very recently people, even taking oil, which we're going to talk about today, oil is just starting to go up, like just going vertical up. It's just accelerating. And gold has obviously gone vertical if you look at the gold chart over the last couple of years. So it's a tough environment, and I've been listening to, especially as we look into the Middle East and the specific conflict that's taking here and all of the second order effects of the conflict. I think one thing that I am appreciating is how few people are certain about how this plays out. It's very complicated. Just giving you some space and grace to forgive yourself for not knowing how this humongous conflict with so many regions involved, with even more regions involved getting involved, that you don't know what happened, what's going to happen. That's okay. You're not supposed to necessarily be able to foresee the future, although I'm sure a lot of people on Twitter, anonymous accounts, will claim to have called it all perfectly by the time it plays out. That is not accurate. So it's just something I've been thinking about. It's very overwhelming trying to keep on top of all of this stuff. And so, if your portfolio is treading water a little bit here, I think that's okay, personally. Led, what do you think?
Yeah, knowing when not to trade is probably sometimes more valuable than knowing when to trade.
Yeah. Having said that, I mean, I'm open to the idea. We spoke about Bitcoin being, although I've fallen out of love with the narrative a little bit, like it's clearly a better price here than it was at 120. So I like it from that perspective. But yeah, a lot of uncertainty. So we're going to talk a little bit more about that uncertainty, as well as get into some of the market thoughts related to them, and then any opportunities that we see as we go through today's news. So let's get into it, starting with the price action. As always, we are going to go to Bitcoin first. Hang on a minute. Is that just down as much as I think it is? What is going on? Okay. Fair enough. Bitcoin is down 4% today. That was a bigger move than when I first wrote the snapshot this morning. It's down 4% to 69.8K. ETH has followed, down 4% as well. I'm constantly refreshing this to make sure it's accurate. Yeah, that is right. Down 4% to just over 2K. BNB is down 3% to 635. Sol is down 5% to $86. We have Hyperliquid down 5% as well, back to $30. On the meme coin side of things, we've got Doge down a few percent. Pepe is down a few percent. Pengu's down a few percent as well. I guess we're just down a few percent, guys, today. That's the general takeaway there. I'm not going to get into any more of those. We have Bitcoin. It did run to, hang on a minute. Let me just update that piece of news. That was the wrong bit. We've got Bitcoin down to 69K, as we said. Oil is going higher as it seems like there is no sign of end to the Middle East conflict. I think some of the conversations around it has suggested that, maybe potentially it's going to be a little bit longer than they thought. Let's see. We'll talk about it today. We'll talk ICE announcing their investment into OKX at $25 billion. Token moved almost 20% higher on the news, so we'll discuss that. We'll also talk AI. We'll talk Anthropic CEO apologizing to the president in an article where things stand with the Department of War. Very interesting political, commercial game happening here on the AI side. Anthropic being snubbed with one government contract. Sam Altman from OpenAI swooping in. Legendary. We'll break that down, and I'll share some of my thoughts on that too. Getting into the rest of the news that to get you up to speed today. Kazakhstan central bank to invest 350. I said $350 here in the snapshot. I'm assuming that's $350 million in crypto assets. In fact, I know that it is. It's just a typo. From its gold and foreign exchange reserves, X Stocks announces exchange. This will allow cross-chain stock trading, including liquidity, enabling on-chain price discovery when markets are closed. X announces exclusive threads. It's a way for creators to monetize content by hiding certain content to subscribers only. That's an interesting development to continue the different ways that people on X can monetize their content. And then finally, Zach XBT announces arrest in Caribbean based on his investigative work on $46 million crypto theft from the US government. So that is the roundup to get you up to speed with what is going on in the space today. We will get into the main headlines in a moment. Again, we'll probably zoom in a little bit into the Middle East conflict, and we'll talk the market thoughts around that, as well as these other important crypto and AI pieces of news. But Ledge, before we get there today, what is catching your attention?
I like the exclusive threads. I had subscriptions on for a while, but then I was like, I don't want to use this feature anymore because it seems so half-baked, and the separation between normal content and subscription-only content was too strong. You could not really tease stuff on your normal content feed, content wall, and then have this like, here's a thread, and then there's one post that leads to subscribers only. I think it is a smart mechanism to do that, but I also think that it is very, very, very clickbaity. You write a viral thread and then you have a hook in there and saying, and now the big secret how I was able to unlock, I don't know, that trading algorithm for Polymarket that made me $150,000 over the last 12 hours, subscribers only. Like, it is very, very easy to abuse the hell out of the system, make it super clickbaity. But I guess it's, from a business perspective, a very well designed implementation. What are your thoughts on that?
When I read it, the zoomed out take that I had, and I think this is really important for creators. And again, I think this is the skill moving forward for business operators when it comes to competing with AI content. The skill is always in the human judgment, I think. And so the big thought that I had was, people who are in this business need to make the right decisions about which content is free and which content is paid, what proportion of your content is sponsored, what proportion of your content is behind a paywall. what volume of content is sponsored versus what volume of content is free. I think this is the key decision that creators and media businesses, and frankly anyone, everyone is kind of a media business now. If you have a following, you could potentially switch on this feature, right? But I've also heard people who have monetized hugely from Twitter because of the following that they've built and just directed them elsewhere and said different things. For example, Nikita Beer, the head of product at Twitter, who is the person who we've got on screen, who announced this change in the product, had replied to a tweet yesterday or the day before saying, I have made millions of dollars ARR from Twitter because people signed up for my consultancy, or they wanted a call with me, or they, we booked something because of me posting for free in front of everyone, to everyone, building up my reputation, building up my standing. So I don't know. I personally, I think it's very, very important to get that judgment right. I think a lot of people will get the judgment wrong because they want to reach for the money as soon as possible. I really think there's value in Twitter being the town square. And if you're going to be in the town square, you've got to be giving away your stuff, at least a huge proportion for free, and then monetize in other ways. Obviously, we do it by partnership on the show. We very, very rarely have like individual sponsored posts anymore. Maybe a long time ago, we might have done that a little bit. I did it very, very little. I think the right way is to try to compete in the town square for free with everyone else for attention, and then monetize via products or services, goods and services. That's how you make money in the economy. So that's my view. What do you think?
Yeah, I think you have to be way smart about monetizing these days. As you just said, I think like the simple route of here's my newsletter and it's going to be $10 a month. Here is this paid access to content and it's going to be X bucks a month isn't probably not the smartest way anymore. And even on the product side of things, I think it becomes harder to monetize stuff. I mean, just think about yesterday, the Worldview app that we had on screen, this like vibe coded Palantir, is a free thing. One of the greatest trading vibe coded apps called Dexter, which is basically a CLI, is a free thing. It's like a vibe coded Bloomberg. All you need to pay for is the API to actually get your agent the financial data to be able to look at the stock market and whatnot. And that is not affiliated with them. That is a completely separate service. So even if you build a pretty cool product, which would have been a monetizable thing a year ago, half a year ago, I think now there's maybe more value in open sourcing that and then finding a smarter way to monetize the distribution. Like if you build stuff like this Dexter that I just mentioned, maybe the smarter thing is if you get that to be the most popular thing that hundreds of thousands of people use, and you have one recommended API partner in there for the financial data, maybe you negotiate a share with that partner. And if it's $200 a month and you get, I don't know, 20% of that and you push that to 10,000 of them paying subscribers, it makes more sense than trying to sell that app for $9.99 a month and have very, very little people using that. Or you have such an insane amount of distribution. Didn't Levels.io just post again on his photo AI thing how much he's making on that? Levels.io being one of the vibe coding elite tier accounts who has launched many, many apps, including this one, which is photoai.com, which he claims makes him more than 100K a month and costs him, I saw it in a recent post a couple of days ago, like 20K a month. And it's basically this app where the hook is fire your photographer, you sign up, you upload a couple of selfies, and it's going to create basically deepfakes of you, or you can just create like virtual humans as models for whatever things you want to do, or use like some of the virtual humans from the website if you pay for that. So the app monetization route still works if your distribution is strong enough, but if not, then maybe building up that distribution and finding ways to monetize in a smarter way becomes the actual game to play, and not making exactly this mistake which you had referenced before, B, which just is to try to make money as quickly as possible. Like as soon as you think you have something, come up with X subscriptions and monetize it for $3 a month and get 10 users paying that, and building up that momentum and distribution and reach.
Yeah.
Way
So
more worth it.
what I'd say, so I agree with you in the part where you said, actually, maybe I just disagree with you. No, there was a part that I agreed with about building the distribution. It's always going to be easier for people with distribution, for sure. You got to, this always gets easier with distribution. The thing that I would disagree with is, I think the reason why I say X is different is because it's this town square. I think you want to try to compete in the town square in general, and you want to do that for free. I think it's a specific scenario where you do it for free. And then I think actually products, I think you should try to monetize. And unless you're super early, maybe. But the thing is, by putting a price on something, you get real feedback from people. So we might say, for example, Ledge, that this monitoring the situation app or website, which I don't think that's the actual name, or maybe it is, that you shared in our Telegram group yesterday, where you can keep an eye on all of these Bloomberg, you could keep an eye on Bloomberg, you could keep an eye on ships moving around, you could keep an eye on what's going on in Pakistan, India, Middle East. It's got all of these news things. You can say it's great, but would you pay for it? And if you wouldn't pay for it, then how good is it? You know, so I think it's actually really important as even us, when we're thinking about how we do things, there are certain things where we switch on. I mean, a lot of our content is free, obviously, but there are certain components now, for example, the Telegram community, where it's like, no, if you want to get in, it's going to be a small administration fee. This is admin fee, it's a one-off fee. And we're going to get that feedback in real time over the year. We've had some people join with that being the case. We've had some people say, oh, no, that we don't want to participate. Either it's too much or it's not the right thing. So we're getting live feedback to figure out if that community is worth what the thing we say it is, and we can kind of figure it out from there. So I'm not opposed to monetizing the product, especially. In fact, I think it can be helpful from that perspective. Do you want to come back on that, Ledge? Then I see Phunky with his hand up. We want to go to him as well.
I think the Telegram is a different thing, but I don't think that monetizing the product so early makes sense. I mean, look at the extreme example of OpenClaw. I think if OpenClaw were a $9.99 subscription, it would never have gotten to that point where it is now. And obviously, Peter didn't need OpenClaw to be profitable for him, because he sold his company share in that PDF creation tool for 100 million euros. So that was never his motivation. But I think that in a day and age where like you can build so many things so easily if you want them, there is less value in just trying to hide things behind a paywall. I think there's better opportunities if you open source stuff. I was looking at so I wanted to have a tool where I can just, wherever I'm content, I told you about that, but audience doesn't know about it, right? Where in whatever app I am, whether it's email, WhatsApp, Codex, Claude, I want to press a button and I want to voice dictate, and it should be aware of the context on screen, and it should run locally. So I don't need to type, and I can speak to all of my apps and have like context aware formatting or things to keep in mind, because maybe I write an email in a more formal way than I would text you on WhatsApp. And I looked at tools, and there were tools out there, and there was a tool that I was about to buy for like $150. I was like, wait a minute, are there some open source solutions there? And there were a couple, and they were like, I could have installed an open source solution and would have gotten like 95% of what I wanted, or I could just take this open source thingy and be like, okay, now build me this feature that I'm lacking. And I know this is not going to be the normal route for people to be like, I'm just taking an open source solution and develop on top of that. But I feel like there's so many great open source things right now that I don't think that in order to get valuable feedback on how good your product is, you need to monetize it. And I think Peter in this interview with Lex Friedman put it really well, where he said that basically the best validation mechanism and contribution to the world are your PRs on GitHub. So if someone's using your stuff and has some feedback there, and because people are vibe coding so much, they will have feedback. Some of that is not sensible, some of that is helpful, but that is a better feedback mechanism. And again, like the community and Telegram thing is separate from that, because that's not a coded product that people can use and develop, but that's like literally access to a community. But for the other things, I think you get way more sensible feedback if you open source something, and then you can figure out if that has enough popularity and distribution. Then you can figure out ways to monetize that better than just hiding everything initially beyond the paywall.
Yeah, I mean, ultimately it's a balance. You can go either way. I think in the end, those two people, the people described, don't need the money. People, in the end, I think the money is the key thing. If you're starting out, you're going to need the money at some point, and so it's a great forcing function, I think. But yeah, at different stages, I think both can be the right approach. Phunky, come into this conversation before we keep it moving. We're going to get to the headlines in a second. But before, one other point around portfolios and stuff. Phunky.
Yeah, just wanted to chime in on the whole monetization thing and just the state of X, because I was at a meetup that I'm co-hosting once a month, and we met these large content creators, been at this for 7-8 years, and they were saying how tiny X is because of their business. They're kind of, some of the points you guys were making, funneling them into other verticals, whether it's YouTube, TikTok, what have you, and they're getting way more business and impressions. So X isn't probably even the place to do this kind of work because it is so niche. Like you specifically referencing crypto Twitter, he said now that the tide has come out with the prices, he said, I swear there's only like 5,000 people on crypto Twitter. It is such a small niche audience. So this, to your broader point, probably isn't you don't want to monetize too early, like you were saying, B, but more importantly, thinking about the platform like you guys are doing, with having the TikTok channel, for instance, and starting to spread your content other places. I think it's more about the slow grind and recognizing which platform is going to give you the best ROI.
Yeah, really, really, I think that's a really, really helpful point. Really helpful point. I think, being thoughtful about the extent to which you're, just spreading yourself out across the various platforms as well, I think can be important. So really good point, Funk. One thing I wanted to bring up before we move into the headlines was this tweet from Darren. Darren is someone who is a very smart investor I've been following for a long time. We used to jump on the same show for a while, more than a year ago. He's kind of come back to Twitter sharing some of his thoughts. And again, it's kind of in keeping with how I started the show. If you guys are finding the market tough, this is one of the investors who I find to be very thoughtful, often saying things which are, not going to be the completely common consensus. He had this to share. He said, what a brutal Q1, even for winning themes. He said, winners are losers. For example, semiconductors, losers are winning, but still down year to date, like software. Indices are stuck at September, October levels. Metals are down, miners are wrecked. Crypto in deviation. Dollar up, TLT down. Again, I think this is just one of the broader points I wanted to make before we go back into the headlines, that this is a tough market with a lot of factors happening, and to try to wrap your head around a lot. And so, not losing money is a great way to preserve capital for the time when it's time to make money again. And I am of the opinion that yes, you could catch the next South Korean stock that 2x's in a week, but when you actually think about that on a relative basis, it's not really an investment to catch the 2x in a 7-day period. That's kind of like just catching a rocket ship just before it launches. You need to be there in the building of it, the process, and be there around it to know that it's about to take off way beforehand. Whereas I feel like at the moment, people are trying to catch the rocket ship. But there's like 10 rocket ships in front of you and you don't know which one's about to take off, and you're trying to jump on the one just before it does. And I just don't think that's, it's a bit of a hectic, frantic market in that respect. So a lot of factors. We'll get into some of them now, I guess, as we go into the main headlines.
I had a little pushback on that before we. I'm going to take it into the main headlines. It is a brutal Q1, but isn't the market like surprisingly resilient given that everything that is going on? Like looking back to last year when Trump started the trade war, the S&P went down like 20-25%, and now S&P is at what, 6,800, and all-time high is at 7,000. So, and we have an unprecedented escalation of the situation in Iran and in the entire Middle East. So given that all of which is going on at the moment, with the exception of crypto is down brutally from its all-time high. But other than that, isn't it just a pretty resilient market that is still trading very close to its all-time highs across so many different segments?
Yeah, I think that's very fair. I think that's very fair. I think the fact that the S&P's just ranged for so long is definitely driving people a little bit crazy, when actually maybe if you zoom out, you can start to accept that, yeah, maybe it's actually being resilient. However, I guess the reason why maybe people are getting more doomerish is because when they do zoom out, they just keep thinking that we're due for a correction now. We're due for a correction now, especially as you layer on some of the AI top-ish the raising announcements on the private side, some of the other things that are going on. I think that is probably why people are skewing negative. But yeah, I mean, there's certainly a reasonable read, right? Despite everything that is happening in the world, and we're going to go into some of those details more in a second, we're still seeing such resilience. So as I said, I do think Besant is a wizard. And so it's very likely that he is, well, I think just managing all of this stuff in a very intelligent way. I don't think there's going to be QE in the way that QE was done before to prop up markets or accelerate them. And, it's interesting that the conversation around, this time around, it won't be Jerome Powell anymore as chair of the Fed. Walsh is going to be coming into office soon. And that's kind of disappeared. That whole conversation about what's the Fed chair going to do, albeit, it's still a vote between a number of people. It's not just one person in charge. But that whole conversation around rates coming down has completely disappeared now with the other distractions happening. So I think that is fair. Let's move into this factor, right? Because we're going to go into the main assets and we're going to get into the ongoing conflict. But before we do that, I just want to give a shout out to our sponsor for today and just remind you guys that we will be doing a giveaway, not on today's show, but over the weekend. I'll explain why in a second. It is Friday, which means we are excited to be sponsored by Yeet. The crypto casino has done more than $1 billion in less than a year, founded by trusted names like Mando, KBM, and pro poker player Ben Lamb. That's more than $1 billion of volume in less than a year. We are users of the site. A reminder to only play for fun and what you're comfortable with. And to help there, we are giving out $500 each week randomly to players active under the Modern Market affiliate link, which Legendary will put in the comments. So do check Yeet out. They have a number of crypto-themed games and a successful sportsbook as well. So stay tuned for our giveaway. It will not be at the end of today's show because the site we use to track the metrics is down at the moment and we couldn't pull the data. We're going to talk to the team, we're going to pull the data, and then we're going to announce the winner in our Telegram over the weekend. And if the person wins is not in Telegram, we'll find them. We will find you, but probably better to be in our Telegram. But we'll find you regardless. Don't worry about that. So let's get into the main headline for today then, Legendary. Take it away. We're talking the main assets, talking the ongoing conflict, oil really ripping here. What do we need to know?
Yeah, let's look at the big one first. Brent is up. It hit $88 a barrel in Europe. That is the highest level since the start of the conflict. Just a couple more updates from the situation in the Middle East, most of them coming via the Financial Times. Iran's president said that some countries have started mediation efforts. That includes Egypt and China, which both have officially also themselves said that they will attempt to mediate in this conflict. Israel has continued to strike Hezbollah infrastructure in southern Beirut. Iran at the same time launched new missile attacks on Israel as well as on Qatar. And air travel in and out of the Middle East is slowly returning. We did see initially 10,000s of flights being canceled, but Etihad, even after Emirates, also started to resume a limited service. And an interesting one is that the US is temporarily easing sanctions on Russian oil sales, in particular to India, to meet these potential supply shortages, which we are seeing after the de facto closure of the Strait of Hormuz. And as a result of that, as I said, Oil is up to 86 now, $86 for crude oil. On the other side of things, the rest of the market is very, very volatile. It is down a fair amount. Gold flirted with the lower end of $5,000 again, is now on the day up 0.5%, almost back to a 5.1K, but has been dropping down from its heights at 5.3K earlier at the beginning of the conflict. Silver also went lower, now went up a bit. Yesterday, when I reported it was as high as $85. Now it is at $83. The stock market also is down a bit. S&P 500 is down 0.5% over the last 24 hours. It's down 1% over the last week. And now it's also down year to date, but just 22 bips. The pre-market for Friday is looking red as well. We have the Dow down 50 bips, S&P 500 futures down 65 bips, Nasdaq almost down 1%. And then last but not least, the other thing that I want to touch on are the total Bitcoin spot ETF net flows. I did report yesterday that we've seen a very good week so far with a bunch of days with inflows anywhere between 225 and 460 mil. But yesterday it did break that streak as we did see outflows to the tune of 228 mil. And also, unsurprisingly, Bitcoin being down today just below 70K, down 4% on the day, as you just reported earlier on the show.
Okay, good stuff. So what's your view here, Ledge?
Not trading this, not really wanting to trade this. I was thinking if I should have traded this volatility when BTC was up to 74K. And I was like, oh, I'm impressed. I was surprised by that, did not expect the topics that we had earlier this week, with Trump focusing on the crypto bill again, going against banks, and seeing the inflows and seeing the rally. I was completely surprised by that. Did I expect that now BTC goes back below 70K within a day? Not really. So it is too volatile of a market for me, especially on the crypto side of things, that I'd feel comfortable to try to trade in and out of that. So for that reason, I'm happy to know that this is not my time and place to try to swing trade Bitcoin, because I'd probably lose a good amount of money trying to be smart here.
Yeah, I really, really don't mind that take at all. As we said, I think preserving capital here is way better. The only thing I am definitely leaning towards, as I articulated last 2 days, is layering into Bitcoin here under 70. And who knows, maybe we go lower, maybe the conflict goes on. I'm very, very surprised everything. I mean, maybe you said this as well. I mean, you were surprised it went up to 74. I'm surprised crypto hasn't gone further down on this news. Crypto had already puked so aggressively towards this 60K, 65K, 67, 68K region before all of this happened. And you would have thought that, okay, this stuff happened and crypto would have got hit even harder. But I'm very, very encouraged, actually. So I'm trying to, this is the thing, right? I know I've been very bearish on Bitcoin and crypto for a long time, and I think correctly from last summer onwards. And I think here is when you want to start to, you want to start to dip back in, potentially. I certainly don't mind. I certainly like the risk reward way more. And I think that's the main thing. Assessing risk reward is way better. And the risk reward here is way better, especially given how much strength it's showing in such a precarious time. Could we go lower? Sure. I think we could, but I'm very open to the idea that Bitcoin even at 69 is that better than gold at 5.1? I think so, on a relative basis. So I'm going to start layering into Bitcoin, I think, with small amounts of LP fees that I earn. So I think that's what I'm going to do. I think that's what I'm going to do.
Where's the money coming from? Is it stables that you're converting? Are you selling gold to do that? Like, are you going more risk on, or what is
LP fees? So like if I'm LPing gold, and I might LP Bitcoin as well, because if I go 10% plus or minus on Bitcoin now, I'll be happy to buy 10% lower than here on Bitcoin. And if it goes 10% higher and I average out of Bitcoin, I'm completely happy with that too. Whilst earning fees. So then maybe you take those fees and then you buy more Bitcoin. Or yeah, if you're LPing anything else, you can take the fees and buy Bitcoin here, I think, rather than maybe just taking the fees and holding dollars, which I think is also reasonable here, to be fair. Like, I think if you're in a challenging market like it is, I think you can just, like for a while, I've been taking the fees and just buying gold. And it feels like you're just printing gold, which is quite a nice feeling. But I wonder if Bitcoin is the switch to be made. That's kind of what I've been thinking. Anything you would want to come back in on there, Ledge? I see we've got Stats up on stage with us as well. I haven't heard from him for a few days, maybe a week or two. So I'd be curious to get his thoughts in a moment. Giving you a chance to come back on that first before we go to Stats, if he's around.
Yeah, I don't mind that LPing at all. I still have my hype BTC pool doing its thing. Probably quite indifferent right now whether I'm in BTC or hype, so I don't mind earning some additional fees on that.
Yeah, and I do think, to be fair, one final point on LPing, the way that I've thought about that risk reward as well is when things get to a price that you like, it starts to become way better. I much prefer Bitcoin, LPing Bitcoin at 69 than I do at 100 something, right? Because in the event that you sell out, I think that's okay. But in the event that you end up fully in Bitcoin, you're also okay because you're at a good price. Whereas if you do that at 110 or 120 and you end up all in Bitcoin and then it dumps to 60, then you're feeling sick, aren't you? So that's just the one part on LPing that I've kind of learned. It's actually the same with NFT lending. You want to lend when NFTs are low in value because you get the protect. So now that CryptoPunks are 60K, for example, if you lend at 50% loan to value, you lend 30K against a 60K asset, and you feel like CryptoPunks are bottoming, then although it's 50% loan to value now, if ETH goes to 2.5 or 3K because you think ETH might be bottoming, and CryptoPunks are now 100K asset, you're super comfortable. Like, you're even more comfortable because you did it at the bottom. Whereas if you lent, imagine CryptoPunks not long ago, I think they went up to 200K, didn't they? They went up to $200,000. You could have done a 50% loan to value at 100K, and now you're completely underwater, and you're not going to see that money. Like, you're going to end up with that asset, and you're only going to be able to sell it for 60 when you lent out 100. So you're going to eat that loss. So these risk rewards get way, way better when the value of the asset which you like is much lower because of just the time of the market. So something to think about. That's how I think about it. It seems to be working so far. Let's go to Stats to get his general perspective on the conflicts. We haven't checked in with him for a few days, and just any other market thoughts at the moment. Stats, welcome to the stage, man. Good to have you back. How's it going?
What's going on, BCheque? How's life?
All good, man. How are you?
Yeah, I'm good. So I've kind of been in and out today, so I don't really have like a lot of stuff to draw from. I apologize, but yeah, any specific areas you want to get some?
Well, I think we haven't checked in with you in a while, but it'd be good to get your just general thoughts on maybe the thing that's affecting the market most and people's affecting attention most, which is the conflict in the Middle East. Obviously, we have already disclosed multiple times we are not geopolitical experts, but how are you kind of experiencing it? How are you experiencing the market's reaction to it? Do you have any general thoughts?
Yeah, I mean, look, I don't think any of this stuff. I don't think our current administration does these things with great long-term planning. I think that they've been very able to, like during Liberation Day when the market tanked, they just kind of walked it back. And the term, taco Trump always chickens out is basically saying that Trump prioritizes the stock market over pretty much everything. He went in and did something sort of similar in Venezuela, and I don't know what's going on there. Said that Rubio was going to run Venezuela or something like that. I don't know what's going on, but that didn't have a big impact on markets. I worry a little bit that this one's just a little bit. If things start to go south and the administration says, "Oh shit, the market's not doing what we wanted to," and actually we don't really care about Iran, I'm not sure if this one's quite as easy to just walk back and push the stock market go back to going up button. Like, it seems like a few too many people are getting pissed off and getting affected here. And so I have a few worries, but I think you guys are right that broadly speaking, I mean, and I hate to talk about war where people are dying in such kind of like financial terms, but I do think that, I don't know, it does feel like markets are still saying like everything's going to be fine here, and this will be like something that'll be easy to not turn into a big financial or a big catastrophe for everybody, even though it already is a catastrophe for individuals. But I do worry. I did tweet this, but it does feel like this is one that's a little bit harder to just push the undo button if you really start to see things go a little bit south.
Yeah, I think that's very fair. I think you're absolutely correct in terms of what the markets are communicating at the moment. Have you also experienced the same thing? So I think the thing that I've noticed is even analysts looking at the market, communicating what you just did, which is that the markets are suggesting that they think it's going to be okay. But then the analysts kind of questioning the markets, saying, I'm not sure about this. It feels like this is different to the previous conflicts. This is far more complex. Are you kind of hearing those same messages as well?
I haven't been paying super close attention, to be honest. I've gone down the vibe coding rabbit hole finally, and I'm
Nice.
doing stuff for my job. So I just have not been listening to podcasts or paying attention to the analysts in the way that I normally do. So I've been a little bit more removed. This is just kind of my sense of this is just my kind of sense, just reading a few headlines. But yeah, look, you know, I don't know. Analysts, if the markets were always right, then we wouldn't have big volatile swings. You know, you wouldn't have high volatility days. You wouldn't have gap days. You know, I mean, the gap days happen because people wake up one morning and say, "Oh wait, things are a little bit different than everyone was thinking yesterday," and what the markets were saying yesterday. So I think, you know, I don't think the fact that the market hasn't gone down doesn't mean that it's perfectly priced in. But yeah. So I don't know how much into those guys. I was an analyst. I worked for Goldman Sachs in the research department for 8 years, and my team was the one that goes on TV on the Bloomberg and talks about what they think of markets. And having sat in those meetings, I think I've lost much excitement about the things they say.
Fair enough. Well, as I've been trying to get on top of this situation a bit more, I have actually been tuning into Bloomberg every day. I did not used to do that. I've been tuning into Bloomberg every day the last week, and my general take from the overall variety of opinions that they have shared is that people are kind of very uncertain and disbelieving of the market. I think people think that it's going to be more complicated, and yes, the market is saying what it's saying now, but maybe people are kind of biased towards the downside. It would be my general take, but let's see.
Be generous is that there's the situation. I mean, it's probably a situation where at the end of the day, nobody wants a long conflict. Like, and I think that's seen a lot of these things. Like, Trump makes these decisions on a whim. Who knows what inspires him to do them? Then he gets focused on something else, and no one else really wants it. So everyone else kind of fades it into the background over time because no one wants to deal with this shit. And, you know, and I think that there's probably some truth. I mean, I'm amazed. Like with Venezuela, it was like this huge deal. We took, like, the U.S. basically took their leader, removed their government. Everyone said, "What's you going to do?" He's, "Oh, well, Rubio and Heck said they're going to run it." And then we literally from 2 days on, we didn't hear about it again ever.
Yeah.
You know, the ability, because no one else, I don't know how everything that he just goes in and messes around with just suddenly kind of becomes no longer newsworthy. And I agree that this one is much more complex, but I feel like that's kind of the backbone of what markets are saying. And then at the same time, we have a leader who really, really, really takes stock markets seriously and really, really wants stock markets to go up and is pretty loose monetarily. He spends a lot of money. These are just all environments where people are afraid of being cash. So yeah, like two things are kind of driving markets right now. I do not think anyone disagree with your sense that anyone gives a shit about Besson. I think he's total. What's the word the guys use? Non-main character, whatever.
NPC.
NPC. Yeah, I mean, I think Besson's a total NPC in this administration at this point. But I just think people realize that, the administration cares a lot about stocks going up. This administration spends tons and tons of money. They want loose monetary policy, and that's just overall not a market that you want to be in cash in.
Yeah. Okay. So heavily invested still, and I think the data suggests record levels are still invested. Okay. Look, we only got 5 or so minutes left today on the show. We've got a couple more headlines to get to you. Maybe we'll deal with these swiftly. First headline, which I thought was interesting, is this news coming out of OKX, which is that ICE have announced an investment into the exchange OKX. This is a partnership with the Intercontinental Exchange, marking an important moment for OKX and for the broader evolution of digital asset markets. They said, the founder Starr said in an article, he said, ICE has built and operated some of the most important financial infrastructure in the world, including the New York Stock Exchange and global derivatives and clearing platforms. Their decision to invest in the OKX and join their board reflects a shared belief that digital asset technology will play an enduring role in the future of financial markets. Put this against the backdrop of, I think you might have seen the news legendary that perps were being considered to become legal in the US as well. Clearly, there's also been that announcement that trading will start moving, was it 24/5 or 24/7 already as well? So we're moving towards crypto rails, we're moving towards crypto time frames, in the sense that being able to trade this stuff around the clock. Even in the other part news in the snapshot today, we had X stocks announcing exchange, which includes liquidity around the clock, including when markets are closed, for their on-chain stocks. Sorry about that noise, if you could hear it. So we've got those. So we're kind of talking against that backdrop. And so I think it's pretty significant. Pretty significant. One thing I would note, though, is that it seems like these US institutions are investing in institutions that are not in the US. So it seems, and I think a fair question that has been raised recently is, to what extent do the US are happy to invest externally into companies that already have big shares, like OKX, like Binance, which is obviously the centralized exchange leader of all? Or are they going to facilitate and allow and encourage people in the US to create these markets, take these markets, and become the leaders? Obviously, something like Coinbase and Robinhood are big players in that arena. So what do we think here, Ledge? What do you think on this news? You are on mute.
I just muted myself. I was unmuted. Cool. Sorry for that. I think it's cool because it's one more venue where people will have access to tokenized stocks. And I think that the easier it becomes to trade tokenized stocks, the more volume we'll see on that. I think that is something that can help elevate the space if you will see enough volume to allow for trading outside of stocks like Nvidia, Tesla, like the typical 10 stocks that trade XYZ, Osium, and all the other platforms have. I think we at the moment have too little volume to trade, say, the entire S&P 500 or the entire New York Stock Exchange. And as we will have more platforms doing that, we'll probably also have a need for some sort of aggregation there. But I think it's very, very helpful that all of the decentralized as well as like centralized trading places on crypto rails are pushing for integrating tokenized stocks.
Okay. Let's shout out our sponsor one more time. Let's just tell everyone about Yeet as we come to the conclusion of today's show. I've got one more headline to do, but just remind people what the deal is with Yeet first before you take it into the final headline.
Yeah, absolutely. We have our weekly leaderboard, the Modern Market leaderboard, in partnership with Yeet. That is where we are giving away $500 to one lucky winner each and every week based on the amount wagered. Not going to do it live on the show today, as you said earlier, because we don't have access to the live data right now, but we're going to sort it over the weekend to get the $500 to the winner. The thing that I can say is that it's been a very active week for the modern market community when it comes to volume and lead. We did exceed 100K. I think typically we do like 60, 80-ish K a week. So our Yeet players have been very, very prolific this week. Also, what I want to mention again is that as of last week, Yeet has changed how the payout of the $500 prize works. It is not a one-time $500 top-up. It is now done via 5 reloads of $100 each, which you have to claim if you're winning that. And whoever is going to win that, I'm going to remind them of that again, because obviously we don't want them to miss out on the prize money. And also the reminder to only keep gambling, or to only gamble with amounts that you're comfortable losing.
There we go. Shout out to Yeet, one of our longest partners now, crushing it on the casino side. Right, let's get into the final headline, guys. Got a few minutes left, running a little bit over, but this was an interesting one. What do we need to know on Anthropic CEO's apology and just this general predicament that AI companies are finding themselves in with governments now?
So what has happened is that Anthropic did publish on the website an announcement that reads where things stand with the Department of War. And maybe just stepping back a little to understand the context of that, what happened previously is that an internal company memo, an internal Slack memo got leaked to the public, where Amodei, the founder of Anthropic, sent basically his memo internally and said things like, where is it? The Trump administration did not like Anthropic as they did not, quote unquote, lavish dictator style praise on him. And that leaking of this memo had led to Anthropic ultimately wanting to come out and publish this statement where they are apologizing, where Dario himself is apologizing, saying, I also want to apologize directly for a post internal to the company that was leaked to the press yesterday. Anthropic did not leak this post nor direct anyone else to do so. It is in our interest to escalate this situation. It is not in our interest, sorry for that, to escalate the situation. And also said that it was like a very, very difficult day for the company. He's apologizing for the tone of that post, doesn't reflect his views, and closing on the note that Anthropic has much more in common with the Department of War than they have differences, and that is on the back on this ultimatum that was set to Anthropic last week, where Amodei was pushing back on 2 policies, one of which being the mass surveillance of US citizens. The other one was being able to deploy weapons fully autonomously using Anthropic's models without a human in the loop. And as a result of that, the situation had gotten more intense between the 2 parties. This leak of that internal Slack memo has happened, and now, as I just quoted from Anthropic, and the CEO Dario Amodei in particular did apologize for that.
There we go. Real predicament here around the relationship between private AI companies and governments as it relates to their work in defense. Yeah, it's a challenging one. I think the positions, as you rightly outlined, are pitting these 2 entities against each other. You know, one argument being that you must comply with the government in a time of war. The other argument being, look, this is not something to take lightly. You've got to try your very best to make sure that these models and tech are ready to take on the kind of autonomous tasks that might be given to them under in very serious situations of war. So I think it's one of these really complicated ones. I think ultimately we're trending in that direction, right? And the argument that this tech whether permitted to or not, will be used in these conflict zones and for the purpose of conflict. So we're certainly trending in that direction. We've already seen the proportion of weapons, the proportion of attack vectors being drones versus missiles has incredibly switched. Like, there's so many more drones being fired across the Middle East now than more traditional missiles. It's my understanding, and I'm certainly no ballistic missile expert, but from the numbers that I've seen, just the pure data, the number of drones is very, very high. So we're moving into that autonomous regime. I think the very nature of war has changed very much so as a consequence. And so I guess we'll figure out what the consequences of that will be. I do think purely from a commercial perspective, Anthropic will feel left out, and so figure out how. I mean, the Anthropic model is a good model, so I think it is in everyone's interest for the government to use it if they want to, if they need it for something. So I'm pretty sure they're going to want that government contract back. So let's see. It's a complicated thing. I do think some people will applaud them for standing up for what they believe is the legal basis for war, which I think even in this letter they said, they're standing up for them, saying we do not believe this action is legally sound and we see no choice but to challenge it in court. But that was specifically to do with designating Anthropic as a supply chain risk. So complicated stuff. Ledge, do you want to close it out here before we close?
Yeah, and you did see that in the user numbers. There was an exodus from OpenAI users to Anthropic to the extent that over multiple days, Anthropic struggled to keep its website online, to keep subscription use up. There were quite some outages because enough people were applauding Dario Amadeus' stance and were moving then to Claude. And I think it is no coincidence that OpenAI was really, really fast with getting GPT 5.4 out and sharing the benchmarks now again, where in important coding benchmarks and other things, it is beating Opus 4.6. That they have probably seen a bit of exodus. They want some users back, and now they're rushing out a new model, which again is not only pretty fine-tuned to OpenClaw per se, but it's also really a damn good model. So I do think that this is the strategy behind OpenAI trying to get it out as quickly as possible, because they have certainly observed a bit of an exodus to Anthropic.
Got it. Okay. Good stuff. Good show. Good week of shows. Difficult stuff that we are dealing with. Complicated stuff. As usual, guys, we're going to continue to try to get on top of whatever is going on in the world to the best of our ability, no matter how complicated it is, and try to figure out what the implications are, the first order effects, the second order effects, the third order effects, as it relates to the market, as it relates to our portfolio. So we hope you enjoyed the show. We hope you enjoyed being with us this week. We'll be back same time, same place. We do it every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts as well. Have a wonderful weekend. Have a good rest of your Friday. See you on the other side on Monday. Take care. Bye-bye.